Hi, and welcome back to the No More Rent TV channel. It is great to have you. If we don't know each other yet, hi, I'm Kaitlin Endres. I'm a realtor in the greater San Diego area with Remax Direct and Endres Realty Group, and I love empowering and educating first-time home buyers. So we have my good friend Fred here. He has been working in the mortgage industry for 30 years plus. He knows everything there is to know, and he has agreed to help us learn. So welcome, Fred. Thanks for being here.
Hi, Kaitlin. Great to see you again, too.
I want to have this video be a little bit more casual with a back and forth because, Fred, there are so many people who would be considered good borrowers before our world started changing. And now they're finding that they may not be able to qualify for a loan. So what would you say are the three biggest reasons that people aren't qualifying for mortgages right now?
Great question. Well, the number one reason is credit. Within credit, we're looking first and foremost at the credit score. Now, credit scores do vary the requirements depending on the type of loan, but also in the environment we are currently in, a lot of loan programs have raised the minimum standard for credit scores.
Are you finding that it's a substantial increase, or I mean, is it a lot?
No, and a lot of them have come back where they're down now to the minimum standard of 620. Mainly, if you're just looking for a home equity line of credit, that's what's gone up the most as far as credit score requirements.
I see. Okay. So for first-time home buyers, keep the credit score strong is kind of
Yeah,
what you're
that
saying.
right. That's going to be the number one most important thing.
Mm-hmm. And out of the three, what would be probably the second reason that you're seeing people not qualify for mortgages right now?
Sure. The second reason is normally the debt to income ratio. And what that is lenders look at how much money you make, what your loan payment and all your other payments combined are, and we use a ratio. So you have to fall within the guidelines. And if you don't make enough income to qualify, that's going to be the second reason why you're not going to.
And that leads right into the third, which I really wanted to touch on. So many people are asking me, how are unemployment payments affecting my ability to borrow? Some people had great jobs and those jobs are just on hold. They are going to return to those jobs, but they're furloughed right now. So how does being unemployed affect your ability to apply for a mortgage?
Right, right. I run into this on a regular basis right now. Well, number one, if you are currently unemployed, you're not going to be able to apply for a loan, where we have to make sure that you have the ability to repay the loan. The good news is if you're a wage earner, meaning you're not self-employed, as soon as you get back to the job, we just need one paycheck and seeing that you're back working again, and we can use that income. If you're self-employed, it's a little bit trickier because we're going to go off your previous 2 years tax returns, but they've added some overlays, which means there's another level of requirement now, which is in your last 2 months bank statements, we have to see that you're generating income, because there's a lot of people that are self-employed, say like a hairdresser, that are not back to work yet. So we do have to see that even the self-employed are back to work.
That makes a lot of sense. And with nationwide, there being so much unemployment, and in our home state of California too, I mean, it's in the millions. So this is really affecting people of being able to borrow and buy their first time houses. So it sounds like, just to wrap it up, we have credit score we need to preserve. They're going to really look tightly at your debt to income ratio. So try to keep your debts low if possible. And then of course, if you're unemployed, it sounds like they're not going to penalize you so much as long as you, like you said, you're a wage earner.
Right. As long as you're back to work, you're going to be fine.
That's great. I think that even though things are rapidly changing, that is good news overall, because things are at least somewhat in our control. And I think that everyone always appreciates when things are within our own control.
Yeah, I'm finding I'm closing a lot of loans still. There's plenty of people out there that qualify. Most of the programs are still available at this time.
That's awesome. Oh, actually, I do have one more question. Are you finding that it's taking longer to approve the loans? Is there more underwriting involved?
I wouldn't say it's taking longer to approve the loans, but it is taking a little bit longer to close the loan, depending on the appraiser's availability. There's all kinds of parts besides approving the loan. we're pretty much Movement Mortgage is known for closing fast, and we put all our emphasis on purchases. So we're still able to close in 30 days.
That's great. And I do want to say before we go, I love your website, Fred. And if you're watching this and you need to be pre-approved, Fred's website, and I always put it right above our images if you want to go to his website. Right on his website, you can click Get Pre-Approved Now and get the process started. So it's very user-friendly. If you do want to check out Fred's website, just look right this direction and you're going to see it. I hope it's not backwards with the filming. But I think it's this way. But yeah, he has a great website. Fred, you have a great website and you're so easy to work with. So if you do have questions and you're watching this, you're wondering how you would fit in, please reach out to Fred and he will take it from there. And of course, if you have questions about real estate, reach out to me. You can see my website as well. And thank you for watching. Best of luck to everyone on your home search and purchase, and we'll see you on the next video.